Why new cars are a waste of money. Did you know? Cars are the second most expensive purchase in a person's life, right after a house. They are not only used for transportation, but they are also used as symbols of status, success, and wealth. But many people end up spending their entire lives working to pay for their car. The cost of cars has risen dramatically over the last decade. In 2022, a new car can cost on average $50,000 and a monthly payment can be $600 or more. That's more than a lot of people's rent or mortgage payments. This is a lot of money to spend on a car, which is why it's so important to know when you can afford to buy a new car. Now, if you are enjoying this video, please don't forget to smash the like button and subscribe for more videos like this. Also, make sure you click on the bell to turn on notifications. Some people are able to purchase a new car with cash and avoid all the interest charges and the extra fees, but for many people, the cost of a new car is too high, so they end up leasing or signing a monthly car payment contract. A new car loan takes up a large part of your income, which can lead to financial insecurity. Depreciation of new cars. Depreciation is also the reason why new cars are a waste of money. Depreciation is the decrease in value of a car over time. New cars lose the most value in the first 5 years, and some models depreciate more than others. Most new cars depreciate at a rate of 20% for the first year alone, with about 10% loss in value as soon as you drive it off the lot. After the first year, a new car will depreciate about 15% year over year, until it reaches the 5-year-old milestone. It is best to buy a car that's at least 5 years old so to skip the majority of its depreciation. New cars are expensive and buying a car that's more than 5 years old can help, as these vehicles typically only lose an average of 7% in depreciation per year. Many people make the mistake of buying a new car with a loan, which can lead to high monthly payments and high interest rates. Buying used cars of at least 5 years old can help you avoid this problem. In addition, used cars are cheaper to buy than new ones and they depreciate at a slower rate. This means that you will likely have an easier time getting out of debt if you buy a used car instead of a new one. New cars have higher insurance payments. New cars are often more expensive to insure than their used counterparts because they have a higher value, and they are more costly to repair in the event of an accident. As a result, insurance companies charge more for premiums. After 5 years of ownership, the car has reached its steady-state price and can be used as a benchmark for insurance rates. Financing a new car will cost you. It is better to save up to buy a car in cash, because the financing costs of buying with a loan is typically more expensive. This is because the amount of money that you are borrowing for a car will be higher than the amount of money you would have to put down if you were to pay cash in full. If you are looking to save money when buying a car, it might make sense to pay for it in full and not take out any loans at all, if you can afford it. Before you make the decision to buy a new car, you should get a sense of what it will cost you in the long run. The monthly payment of the car itself is not the only financial consideration. You also have to factor in fuel costs, insurance, and maintenance. This can take a huge chunk out of your monthly budget. Financing a new car means spending your money instead of saving it. You can see how this might make you poorer over time. If you must take out a loan to buy a car, consider a used car instead. Used cars have lower monthly payments, which means that it's cheaper over time even when you include maintenance costs into your calculations. Low monthly payments are a ripoff. Low monthly payments equal to a longer and more expensive car loan. When it comes to car loans, many people believe that lower monthly payments are better because they can afford more expensive cars with less money out of pocket. However, this isn't always the case. In fact, when it comes to car loans, low monthly payments can often mean a longer and more expensive car loan. The reason for this is that on lower monthly payments, you end up paying more interest over time than if you were to take out a car loan with higher monthly payments. The monthly payment of a car loan is often the deciding factor for many people when they are looking to purchase a new vehicle. The longer your loan, the higher the interest rate. If someone has an extended term length with a high interest rate on their loan, then it will be more expensive for them in the long run compared to someone who has a shorter term length with a lower interest rate on their loan. Low monthly payments are a common misconception when it comes to financing a car. As seen, there are many reasons to avoid purchasing a new car. The most obvious one is that as soon as you drive off the lot, your shiny new ride will lose about 10% of its value. Car ownership has always been an expensive proposition, but there are ways to make it less painful. You can buy a used car that has depreciated in value, in order to save a lot of money on the purchase price. You don't have to worry about depreciation as much because the value of your vehicle will depreciate over time, but that depreciation won't be as significant as with a used car. Just make sure you are purchasing your used car from a reputable source, in order to avoid being scammed. Please don't forget to smash the like button, subscribe and click on the bell, it will help me a lot. Thank you for watching and I'll see you on the next video.